Welcome to On the Edge, a show examining how deals actually happen in commercial real estate. Host Malcolm Davies, founder of Way Capital, speaks with professionals in development, investment, finance, and more for insights into how these business leaders get deals capitalized. Malcolm's career spans more than 20 years, during which time he has managed nearly $20 billion worth of financings. Now to your host, Malcolm.
Hi, everyone. Welcome back to On the Edge. I am your host, Malcolm Davies from Way Capital. I am so proud to have Deborah Smith join us today from CenterCap Group. True, honestly, legend in the business, Deb. I'm going to give you that. And I just want to say welcome to On the Edge, Deb.
All right. Thanks for having me, Malcolm. I'll take that as a compliment. This podcast is going to go great with that intro.
I think so. So let's make it go viral. Let's get into this. All right. So, Deb, we've known each other some time here through YPO and just seeing each other in respective elements of the general commercial real estate industry. But, your career is really impressive. So, to the audience, maybe before we get into CenterCap, you guys are involved in, maybe give the audience a little bit of how did you get into this business in the first place? And how did you get into your career?
Sure. So I'm Australian. I've been here in the US for 20 plus years, came over before the .com. And I was very grateful. I was transferred here with Morgan Stanley, which I had started out of college in Australia. I grew up on a dairy farm in rural Australia and was moved around a lot as a kid. I kind of had nomadic parents that moved around a lot and just fortuitously ended up in a high school where the teachers decided I actually was pretty smart. I could learn a thing or two and suggested I go to university and not really thinking a whole lot about it. No grand plan. They helped me fill in my applications. I got a spot doing a double degree at Eco Law at University of Sydney. And I graduated from there and landed a spot at Morgan Stanley. Very very grateful. I spent a year there and then they transferred me to their New York office as a loaner for a year. And I was supposed to go back after that year and I ended up staying. And that launched my banking career. None of it was expected. Morgan Stanley was the bank, the US bank I applied to. I was going to be a tax lawyer. And it was a little bit of seeing the opportunity, right place, right time, and taking a chance and saying, sure, how bad could this be? How hard could it be? I'll figure it out when I get there, and just letting things play out.
So the transition from being in Australia to the United States, was that a challenging transition or is it an easy one?
It didn't go well. It's coming from a very rural background. It did make it challenging. It's I remember thinking when I first come here that this is not normal. I must have said it 1,000 times. This is so not normal. This is not normal. And now over the years, it's kind of become my normal. But it was a very different challenge. I had been on a dairy farm till I went off to college, and so coming into New York City, I'd never been exposed to that kind of background or that size firm at all. And so it was a little bit of figuring it out. But again, I had fantastic teammates. I cannot say enough good things about my power utility teammates at the time at Morgan Stanley. That again, similar to getting into Morgan Stanley in the first place, just saw something that they thought was worth an investment. And, it's funny, out of my whole class that started with Morgan Stanley, I'm probably one of the few survivors still in investment banking. My 200 plus class. So the one they decided to take a shot on was worth it. I actually turned out to stick around.
Well, I guess you can handle the brain damage, I suppose, of the business. Maybe it's the dairy farm background.
It's funny. This is a case of ignorance is bliss. Like if you don't realize how hard it is, then you don't really realize how hard it is because you don't have any frame of reference. When you come from a life of zero expectations, it's really easy to exceed expectation. it's a little bit of that.
It's true. I mean, honestly, it has to have an influence, a big influence, I think, in your career success to be able to come from something that's so disparate from what you do today to what you were raised in.
Yeah.
How do you think that intertwines in your daily, interactions with folks and how you succeed?
Yeah, look, I think part of the survival in this business is banking is not easy and real estate is not easy. You know that as well as I do.
Hmm.
And so the
Yep.
combination of them is really not easy. And I think you can't get too hung up on stuff and you can't belabor decisions and you can't belabor the choices you make and you can't take offense to things. You just got to roll with the punches and figure it out as you go along. And wherever you are, you got to have a bit of a tough skin
Yeah.
and just keep moving forward. And I don't take things too personally. I'm pretty hard to offend. And so I think that skill has served me well over the years. And I guess I'm grateful. My background is certainly not an ordinary one. But by the same token, it's I didn't know that. I didn't realize that my background is particularly different than other people. I didn't give it too much thought. Even when I got into Morgan Stanley, I've had lots of great career options along the way. I never really thought that they were things I couldn't have. They were there, and I just took advantage of the opportunity because they were there. And so I never really thought too much about the path or the progression. And I think that's where you get to be brazen. I think if people don't spend a whole lot of time thinking about, the thinking about or overthinking their decisions or second guessing their decisions and just doing it, it's a lot
Yeah.
easier to find peace and brazenness actually in the choices you make.
I love that. The part about, some people always say, oh, to be successful, you have to have a little chip on your shoulder. And that may be true, but at the end of the day, you just want to be who you are naturally and
Yeah.
you will excel, and, at least from what I see in your success, a lot of it comes from your ability to be naturally gifted in communication and skills that are, being able to connect with folks. And I know that for a fact is part of your success. Have you always been that way? Like, were you like this when you were younger?
Well, look, I've been working for a very young age, and when I was a kid, I didn't think it was unusual an 8-year-old could drive a stick shift tractor. I mean, it's like that's the upbringing. I don't know any other life, and so I never thought about it. I never drank milk out of a carton until I was pretty much going off to college. So I didn't think too much about whether these were the way other people had their life. I knew it was weird for me as I made adjustments through it, but it never occurred to me that steps for other people were weird too. It was just the progression of what was in front of me that I had to take. I just did I'm pretty good at putting one foot in front of the other and seeing where the path goes, as opposed to overthink or mentally, think too far forward. It's about really being very good at what I'm doing and wanting to be the best of whatever I'm doing at the time. And then keeping my eyes open, and as opportunity presents, that if I'm going to go after it, I'm going to nail it, and we're going to be successful. And that's my mindset. And I've had that, I guess, since I was a kid, whether it's milking cows or I don't know, whatever else came up in my day's life. But it's always been that mentality that if you're going to do a job, that you do it the best you can and you finish it. And you want to be the best. Now, I don't always think, what does that mean vis-a-vis anybody else? I always think of it vis-a-vis what I expect of what I think is the best, and trying to aim and hit that expectation.
Okay, so let's unpack a lot of this, but you went from Morgan Stanley, and I believe from there you started CenterCap Group in 2009. Was there a spot in
there was a
between
couple
that?
of banks. I moved around, so I was internally promoted at Morgan Stanley. Again, a lot of support at that firm, so pushed me through the ACP program, and then I went over to Wachovia to do healthcare banking. And again, a little bit being in the right place, right time. I didn't know anything about real estate, nor did I go over there to do real estate. I was a power banker, and I wanted to do healthcare. I said, don't ask. I want to do healthcare. So I'm like, I want to do healthcare. So I'm going to go over with COVID and I'm going to do healthcare. And I was there for a New York minute, but it was 2005, which is the year of the REIT boom. So my first deal was put on the Gables Go private, and didn't know what an NAV was at all. I was like, oh my God. So I was put on that transaction, and the rest, I then proceeded to do transaction after transaction. I've written so many fairness opinions for REIT deals over the years. And that was my progression. And then we went over to Lehman with a team, and was at Lehman for a while again through the boom. And then fortuitously, before Lehman collapsed, I took a job running CBRE Global Investors, their global M&A business. And so we had a team that reported directly into the CEO to do entry-level deals. And so I left it was after the Archstone Smith deal in 2007, and I went over to CB, and then early 2008, the market crashed and Lehman went bust. So again, right place, right time.
would you, a lot of transitions. Look, you can see them in today's market today. A lot of people moving, either starting companies or moving from one side of the aisle to the other. Was the start of CenterCap, hey, there isn't much out there right now. Let's just go do this. 2009 was certainly probably the least amount of transactions in the history of, I think, our career that year.
Thanks,
was
Malcolm.
that kind of right? Our career. So, I guess, how did you start the company, and what made you want to start the company?
Yeah, well, look, every career move I've made, none of them were anticipated at the time. There was some impetus that led to it that to me said, oh, maybe I should think about that. And in all cases, I made a move based on relationships, all of them. Every bank, every career choice to CB, starting up CenterCap have all been based off the back of a relationship. I've been fortunate enough to be a wonderful collector of amazing relationships throughout my career. And I invest in them, and I put the time into them. And so I'm a good teammate from that perspective. And, my current business partner is one of the first, which is Lisa Beeson. We've been working together since my Morgan Stanley days. June, who I founded the firm with, we worked across 4 firms together. And so I am that collector and believe if it's not broken, why fix it? And I value relationships. And I think good relationships are hard to find. And when you find them, you hug them and you hold them because they're really hard to find. So even with starting up CenterCap, June and I, we've been through a lot. We've been through the trenches a lot. We've been across multiple firms a lot. And we're a team. We're a team. And so the opportunity for CenterCap, again, it was fortuitous. We got a call and said, hey, there's a company that could use your help from one of the big law firms. And June and I, because it was coming out of the GFC, I'm like, yeah, sure, why not? Why not? How high could this be? We might as well just give it a whirl and let's just see what happens. And the next thing we need office space and we need a bank account and we've got more people and wanting to work with us. And we were lucky, again, all relationships, that one of the big owner operators today gave us office space. And he said, here, take this office, gave us a printer, a couple of desks. And that put us in business. And those relationships from the early days for CCG are still our same relationships.
Sure.
Now, if I think you had said to me in 2009, hey, you want to start up a boutique investment bank, you 2 women in your 30s, you think you want to do that with all these kids? I would have been like, are you crazy? But that's not what we did. It's an opportunity came through and we saw it for what it was worth. And one thing led to another. And we're like, hang on a second, maybe let's just give this a whirl and let's see how this pans out. The market needs us, which is why we're getting calls. We've come from the principal side. We understand this sector. We understand the industry. And then we realized that the market really needs people like us and needed a team like us. And so that's what we realized. But it was the opportunity came to us first before we went looking for it.
So you're solving a problem, which is the key to any business. There's a challenge out there. You're involved in, as I can tell, and in things that I see of you, you're involved in lots of M&A activity. Yeah. You're involved in capital raising, and you're also involved in really consulting these firms on what they should or should not be thinking about. How do you allocate the time between the various business lines that you have, and where do you see? I guess let's start there. And do you break it up between you and June, or how do you kind of handle each side of the business?
Yeah, look, when we started, the business has definitely evolved over time, and it's all been responsive to opportunity. The core of our business has always been buying and selling, advising on investment management, buying and selling of managers, buying and selling of owner operators, developers, service companies, property managers. And the second core of our business was JV capital raises, usually with a fund manager as your takeout. And that was because we were REIT bankers that had worked in a private equity shop. And so they were the relationships in the business we understood. And we felt at CB that of all the banks covered us globally, no one really understood our business. They understood it. They didn't understand it from a private markets perspective, of being in the trenches of how to look at real estate, how to analyze an investment management company, the way we did, because we were on the inside. And so over time, we've moved that business though. So we still do the M&A stuff, and it is a huge part of our business. We've probably done the 2 largest housing deals over the past 2 years. And I think we'll have another good year this year. And so that's our core business. But on the capital raising side, we've grown it beyond GP fund managers to be a private placement business focusing on LPs, pensions, endowments, foundations. And we have a big insurance coverage practice as well. And they're evolved a lot in our business as clients and as counterparties. And that we've built out. But that was responsive to our clients, particularly, that said, hey, if you're doing all these services for us, why can't you raise our fund? Why can't you raise our separate account? You know, if you're doing all this other stuff, because we have a big consulting practice too. And we had shied away from it for years because we didn't have that strength of backbone. And then many years ago, somewhere between when we started to now, we really put the effort into building out that business. And I think our practice now on the private placement side is really strong. We have a really good, strong insurance coverage business as well. And so now we've realized opportunistically that there's really no firms in the industry that can provide a holistic life cycle solution for a client. So we can help with succession planning, valuation, product development, how to grow your business, capital raising, whatever capital raising you want, we can help you with that. And we can help you grow, whether you want to buy or whether you want to sell. And so out of that, our client longevity is very long. And so while banking is thought of as transactional, yes, it is in part, but for us, we're focused on the forever clients. And so we're focused on good transactions and good advice. And that's a lot harder.
It's funny, you know, there's so many things you say, because we kind of touch each other in our businesses, but a little bit, you know, I'm more of a level capitalization. And it's always, you know, I always say we get paid transactionally, but it's all about the relationship. It's the long term that you have to focus on. And I feel like you've done an amazing job at this, being able to manage, you know, how you grow a company and also how you monetize it, right? Having the M&A side of the business is as important as anything, because once you've raised the money for the company, you know, how are you going to exit it? What's the way that you get there?
Correct. And how do you maximize? What do you have to do with your business to ensure you're maximizing your exit value? And smart clients, the good ones that come in and say, hey, Deb, we've got all these business lines, but which ones actually generate the most value? And should we be spending out all of our time on that? Or is there value still having these other businesses? And if so, what do you think about that? And they're the forward thinkings of, I know I want to exit at some point in the future. So I recognize I need to start thinking about this stuff today so that I can maximize on the exit, right? If you're going to put an hour of time in it, then time is your most valuable asset. You want to make sure you're putting in it where you can get your biggest bang for buck.
I mean, look, the reality is you're doing things with such a long range thought process that, you know, I kind of equate things to American football. I'll just say American football for you, you know, not just football, but the reality is you're on the 1 yard line and you're thinking about how to get to the touchdown 99 yards down the line. You're advising them at that 1 yard line and knowing that all that advice you're giving them right there at that 1 yard line is for that touchdown. That could take year, 10 years, 5 years, 15, whatever it may be.
It could. Look, and we've had clients, we've had them almost as long as we've been in business. And we've done multiple things for them. We do a lot of different types of transactions for them. But they've come to, they rely on us to give us not only advice, but good advice. And if we don't think we can help, then we don't. We don't take on an assignment unless we have conviction we can deliver, because it's not worth it to us as a team to have a different answer. And if they're going to do a transaction, I'm perfectly fine saying, look, these are my thoughts as to why you shouldn't look at it, as much as this is the reasons you should, because not every transaction is a good one. I know lots of transactions that didn't work, and I think we take pride in trying to create solutions that are sustainable.
Okay, so with respect to all of the things that you do with your clients, it seems to me that you have had a great focus in niches for them in different spaces. In today's market, which is massively dislocated in various elements, we know that niches are working in commercial real estate today. And how do you think about niches, and then how do you think about how to guide your clients into either A, they're already involved in something, or B, maybe they should be thinking about it. How do you think?
Over the last couple of days, I've had a lot of conversations, particularly around the housing space. And housing, if you think about it from a very simplistic level, when 15, 20 years ago, when I started in real estate in 2005, there used to just be housing. There was multifamily apartments. That's what it was, multifamily apartments. We worked on the Campus Crest IPO, and the talk was, what do you mean you're going to have bed bath parity, right? Because student housing wasn't thought of a true asset class. Right. So, now we're carving out student housing out of multifamily apartments. Now let's just keep going. I can talk about micro apartments. I can talk about active adult living. I can talk about attainable housing. I can talk about workforce housing. My list can go on and on and on. Why does that occur? These are our niche spaces, but why? And it's, I think in part, there's a few reasons. One, I think technology and the speed of communications, the speed and the level of information transparency. Information at this point has become commoditized. It's a commodity. But your ability to take it and say, well, I'm not going to try and solve for the masses. I'm going to solve for this very specific group. And by doing that, because I don't have to dilute, I have an ability to create a greater return. And the double benefit of that, beyond being able to create the greater return, is you're able to distinguish yourself with capital, which is the lifeblood of every firm. It's the lifeblood of every firm. It allows you to distinguish yourself. So when you go to an LP and you say, I have this strategy, they don't say, well, I have 5 other people that do that. You can say, no, I do this strategy. They don't do that. They do these other things. This is I have no shift on style shift, and I do this very one thing. And if you think through all the machinations of housing, that's what's happened. Manufactured housing, there's a whole lot. I can volumetric. There's all kinds of housing I can come up with, but they're all designed to capture a segment of the market that you can do today and still create separation from competition. And that, I think, is the birth of niche space.
What do they say? You don't want to be a jack of all trades and master of nothing?
Yes. That dilutes the brains. you dilute it down. But that's the fun thing. And the great thing about real estate is there's so many really, really smart people that are willing to take risk. I worked with Brad Hardgraves and their team when they had Common on the co-living, side. And they ended up merging that in with Habit to become the largest global player in that space. But when they came to us, we had worked on them a deal with an LP we had put with them to do some co-living housing. And out of that came my relationship with the Common team. And that product, which I'm a big believer in, is, but it's a niche product. It is designed for a certain segment of the market. And in that segment, it works. And I think it too would have been encapsulated in the concept of apartments more broadly 20 years ago. Because here's the common example, I think, about what co-living, and we wrote about it a few years ago, is that co-living at the end of the day is just formalized roommating. Who would be listening on your podcast has never had a roommate?
That's right.
Everyone's had a roommate. Nope. That's what co-living is.
If you haven't had a roommate, you're doing too well in life, and you haven't had these skills.
That's what co-living is. It's just formalized roommating, and it's just calling it for what it is. And there's a lot of different forms of co-living models that are out there, but nonetheless, that's what it is. And so there is another niche. So the list can go on as to round because housing is so ripe.
I mean, and that goes back to the masters of nothing, so to speak, because your specific either geographically or asset type within. And you're right. The reality of the niches within housing, 20 years ago was that you were one niche, maybe a couple senior housing and traditional. Today there's 20 plus. And it feels like raising capital in somebody that doesn't have a specific niche, for those LPs, it's like very difficult because it's like, what are you doing for me? I need you to be deep in that space. That's why you're valuable to me.
Correct. And there's so many. The field of real estate players, there are so many. The amount of folks that have come to me for capital raising across all the product classes, except office. Nobody's trying to raise capital in office, except for office. Is there are so many folks that come in that the real question is I always ask is, look, if I take away your track record, right? Because everyone's got a great track record the last 20 years. It's just, everybody does. It's no longer your ticket because it's assumed you have a good one. If you don't have a good one, it's noticeable. So that's the assumption. So what's your story? What makes you different than anybody else? And that's really the question you have to solve. Because if yours is a resume in front of, for me, I deal with institutional LPs, is if you're going to put your resume in front of institutional LPs, how are you going to get them to remember you?
Absolutely. We could talk forever, by the way, Deb. I know that for a fact.
On housing.
So, yeah, absolutely.
We talk about anything.
Absolutely. So let's take a moment to, I think the audience, and we had a little bit of the discussion before we got on today about women in our industry, how few there are, and then even further to that, how few women have started businesses within our industry. Can you maybe help the audience kind of look at how you've grown your business and how we think we should think about getting more women involved in commercial, and what we should be doing to attract more women, not only to be in the industry, but also to start businesses in this industry?
Yeah. Look, I over the years, and my background's a little bit different, but I think I've realized over the years that there's a lot of things that we can do. Having worked through elementary, middle schools, and high schools multiple times at this point, I think that education needs to start earlier, right? We could do society, teachers, everybody can do a better job of opening everyone's eyes to the possibility of what you can accomplish at a younger age. And I think as we see more people become successful who are women in this industry, it sets it's not a role model. And that's not what I'm talking about, or a standard. You don't question something if you see it a lot, right? You just assume you can do that, right? Because you've seen hundreds of people doing it. If you saw, if every person that you came in contact with when you're in high school who was a female was an investment banker, then you don't think that investment banking is not something you can do. You just don't, because everybody's doing it. And so I feel that we could do a better job of bringing, of enlightening and talking about these things from an earlier age, even back into middle school, and introducing concepts around, for me, for real estate and transactions and the stock market, and at least making it familiar. And so I think that can happen. I think what happens is once they then go off to college, it's the same kind of access and the familiarity and who you see moving around you. And whether you think, if you're going out on a limb, it's harder than if you see it all the time. And then I think in part, what I see as a problem too, and I fielded many calls over the years from girls from podcasts, particularly I've done college ones as well, is just not to overthink this. It's look, if you want to have a run in investment banking, you go after it. It's don't question, if you don't see it. Someone has to get the job. Why can't it be you?
The power of AI and the changing elements of this business, I think you and I would probably agree with this, that the ones that are the real deal makers, the ability to communicate, connect, be trustworthy, and have those true depth. I feel like there should be an element of the change in this business. And candidly, I think many women would excel in this business as this continues to grow, and that the relationship dynamics between all the different parties that are involved. as someone whose mother was a NASA scientist, I really saw her push herself into things that, that no other women had been involved in. And you're right. You need to have more people just being there. And so getting involved earlier on.
They just need to be there. And it's if you grow up, for example, you have two parents who work, then your working assumption is two parents should work. I mean, you don't know anything else. Why would you question that, right? You tend to, if it's there in front of you, it's an easier to accept as a path if it's right there. And that's not to say that you can't have it if your mom was home, or I'm not saying any of that. What I am saying is that it's easier not to question if it's right there in front of you. I often find that a lot of girls, if their mom is in a career, that they can see that, and that is their expectation that they're going to do the same.
Wow.
Rightly or wrongly.
Deb, what do you predictions, we always like to end a little bit of these on the edges about where we think we're going. Give us your thoughts about our commercial real estate markets, US based or globally. But reality is how you see the world either changing going forward, or what do you see in your predictions in the next few years for our space?
Well, my topic right now, which I have a few topics that are a favorite, so I'll hit them real quick. The first one is, I think, infrastructure and the collision with real estate to become real assets is one. Yep. I think as the world has to spend increasing amount of dollars on CapEx into traditional infrastructure to accommodate not only from increasing population, but shifts in population, continues to drive or encourages infra to spread its wings. And we're starting to see them increasingly more show up in traditional asset classes for real estate. Yep. I think that will have very interesting implications, probably for pricing real estate, since infra has a lower cost of capital. So that'll be interesting how that plays out, for sure. I've been a big proponent that I think insurance companies are increasingly becoming more aggressive as acquirers and as third-party investment managers, which I think is an interesting trend. They've typically been just a capital provider. I think the business model is changing for that. So I think that's interesting. And I think we're going to continue to see more niche classes of real estate, and to a point where talking about for food groups is an old-fashioned thought that doesn't survive the times. We have to realize that this is an evolving industry, and technology is going to keep making it easier to do that, and it will continue to regenerate in that sense. And so those who are willing to take some risk and those that have the right product will be the ones that prevail.
Deb, I can't thank you enough. It's been a true honor to have you join us today on The Edge, and a true legend in the business, and I really do mean that.
Thank you.
And thank you so much for coming. And till the next time, I'll see you. I'm sure at Orlando or somewhere where we'll be in YPL. So,
all right, I'll catch you. All right, thank you,
Deb.
All right, thank you.
Bye.
Thanks for taking the time to tune into our latest show. As always, you can find us through our YouTube channel at youtube.com/@wayontheedge or at our website at www.waycapital.com. Until next time, keep working on the edge.